Today is July 17, 2026, and we will be looking at the trades of the day. Friday, last day of the week, day 3, at the backside of the week. So, as the previous video that I made, I was talking about point and figure, which is the current patterns or style that you see on the chart. And we also have Renko, which is obviously the exact same as if you were to use the candlesticks, except that you are avoiding all the extra noise, which is the extra candlesticks and wicks and all this unnecessary nonsense. As you can see, these, as far as let me see, what day was it? Well, I'm not trying to go all the way back, but especially on Wednesday, Tuesday, Monday, last week, Friday, Thursday, a lot of the indices, especially U30, had these unnecessary spikes where a candlestick, let me see if I can, candlestick would be like this, and the wick would be like this, at 10:16. Like, what type of grab is this at 10:16? I could see if that was 9:30, but 10:16, come on, man. So, to avoid seeing that nonsense, I will show you point and figure first for the trade. Now, of course, I like to trade at 10 a.m. This trade ended up being at 9:45 instead with entry. Now, of course, it's still the trap and ship, just like as you were to see it on the candles. V bottom, as I drew here, or W bottom if you want to count the first leg. Break a structure if you want to talk about price action. Breaks above, stops below the candlestick, price is gone. Or based on point and figure, where there's X's and O's, price breaks above the O's, the column of 932, and on my stops, typically it's 3 to 4 X's. On buys, obviously, if it's a sell-off, it's 3 to 4 O's. But since I'm using traditional, so it's every 3, or it's every 1, I forget. Let me see. It is every, let's see. Okay, so it's every 1. Every 1 tick, I believe. I forget if it's tick or, but yeah, every 1 it'll move or form another X, obviously for the buys, or a O if price is moving in the down direction, rather than ATR, which would automatically adjust for me. But I just prefer having the traditional and setting it to 1 regardless. So therefore I would not have a 3 to 4 X stop loss for the buy, or a 3 to 4 O a stop loss for a sell. In this case, I would just base it off of the eye test. But this one was based off, we had our half level at 74.50. So there, that's where the stops. For an 80 pip stop, TP was the next institutional level, as our whole level was 7,500. First TP, of course, would be high of session. Now, using Renko or point of figure, the session it will be lower, or the high or the low session it will be lower, just because this is not count wicks. So if I were to go back to the candlesticks, so you can see the high was 74.86.5, a new extension at a time, 74.86.5. $74.85.7, basically basically the same area. 86.5 is right here. But in a lot of cases, depending on the wick size, Renko and point figure will be lower when counting the borders of a specific session. So, regardless, we have our V bottom. This always happens, this pattern, for the 10 a.m. on said day, whether it happens on Monday, it doesn't happen Tuesday, and then it happens Wednesday, and then it doesn't happen Thursday, and then it happens Friday. But this pattern will always repeat itself to the end of time. This has been used since the 1900s, point and figure rather. The pattern has been there since the beginning of the market. Renko has been used since the 1700s. I'll show the Renko version right now, actually. But yeah, this is the V bottom, W bottom, whichever one you want to call it, same thing. Price broke above, that's a break structure. For the buys up to higher, so low session to higher session. We're at the low of the day, we're at a half level as well, and we're at low of the week. We have 4 confluences on top of breaking and entering. Renko version. Now, Renko says it's gonna look mad crazy. Hold on. This is a V bottom, but I'd rather see, I need the pullback, right? So if you look here, it says 6. So every 6 pips, well, in this case, it would be 60 pips, 6 ticks, I believe is the equality. Each brick will form after 6 or 60. So I will show you. $60 for the brick. So that's what a new one will form. So now, if I go to the 3 minute, it moves down to 3.5 for some reason. Because if I go to the 5, we're back up to 10. So for today, the 3 minute was the time frame for the SP 500, and as we can see, we see a W bottom. Price broke above 945. Of course, Renko and point of figure do not go based off time. It goes based off price. How is price moving? So if we go on the candlesticks, 948, 945, 947 was the entry, or 948. Back to the 3. Renko. Okay. And our stops, of course, entry is here, but I was late. Entry ends up being up here. But regardless, price breaks, entry, stop loss, 2 breaks back. Usually for Renko, it's a 2 break stop loss. So all the way up, half level to whole level. The market will always repeat itself. History will always repeat itself. The pattern will always repeat itself. Like, it goes for everything. Like, you will always, if you want to go forward in a car, you will always put it in drive to go forward. Every time you want to stop, you will always press the brake. Everything is relative. Like, it's, oh my goodness, this is so simple. The candlesticks is a distraction. Like, look. Why do I need to see all these wicks and this little movement when I can avoid seeing that and see, oh, price is moving up. It's a W bottom. We're at the low of the day. It's a trap and shift. It's a reversal. It's so simple. Like this, I don't see any noise when you're on point and figure on the X's and O's, or you're on Renko. There's no noise. Okay, let's go to U30. As far as the other setup, oh, okay, I forgot. Yeah, this I just wanted to. It was 10:30ish, I think, or something. So I went for the sell to the quarter level, and I wanted to see if it was gonna come down here, but there was no specific reason for hopping in that trade. That was just because it was not based on Renko or point figure or anything. That was just, oh, level to level. Okay, cool. Okay, U30. Okay, now U30 looks more scrunched just because I'm on traditional and I set it to 1. So SP, it works out because the increments are smaller rather than U30 or the NASDAQ. That's what it looks like. If it was ATR, it would not look like this. But it's all good because the same thing happened. Trap and shift. We dumped down, came up, the slight pullback, and we're gone. Break above, break a structure, and now entry, stop loss, TP, New York session high, and the continuation up to our half level of 52,500 flat. And this is, come on, man. Low of the day, low of the week. That's Tuesday's low. There's a low of the range. Come on. That was the only one. Nas didn't look. It was the same thing. Low of the day, low of session. It just didn't. It looked more separated. So that's why U30 and SP looked the cleanest. Textbook. This as well, clean, textbook. Nas was just, everyone knew it was going up, but take the highest probability trade, the cleanest trade, which would have been SP, and then U30 as we see, and that's it. Those were the trades for the day. That was the, I guess you could say, lesson, and that has to do with life in general as well. But that is it. Wait till Monday for another trade. If possible, I'll make another video. If not, then we'll wait for Tuesday.